Welcome everybody to another special edition of Pre-Market Prep at the close. Spencer Israel, Joel Elconin, joined now by today's special guest, Marc Chaikin, founder of Chaikin Analytics. Marc, good to see you. Good to hear from you. And before I throw it to you, I wanted to start with Joel here. Joel, give us, as you've been doing, give us a quick recap of what we've seen in this market today, because as we
Uh,
expected, it's been
yeah, a little quad witch volatility here. We tried to rally early in the session. Came nowhere near that pre-market high at 24.99. We finally stalled out at 24.42 and have been in a nosedive. There was a little bit of rally afternoon, but came back and sellers are out in force. The good news is we haven't taken out those pair of lows from Wednesday and Thursday at 22.65 and 22.75 respectively. Our current low stands at 22.96.25. We have 19 minutes left in the session here. Carnage across the board here. Crude gives back a lot of yesterday's gain. Gold holding in there a little bit. Silver trying to rebound. That's up a little bit more than gold. And Bitcoin 700 points off its high. But folks, as you all remember, on March 5th, Marc Chaikin was on our show, and he unequivocally stated that he did not want to own any stocks, and it was time to be on the sidelines. Mark, what a timely call that was. How are you doing today?
Good, Joel. How are you guys doing?
Doing okay. We're doing okay. Mark, thanks a lot for coming on. It's a pleasure to speak to you in the afternoon. So, assess the damage here and give us a forecast for the future.
Well, the real damage, as you know, is in the fixed income markets, and I'm still on the sidelines relative to stocks. We are at the stage in a bear market, and obviously we are in a bear market where you typically get a 10 to 20% rally, but these are not typical times. So I think out of the ashes here, you could get a rally at any time, but it's the carnage in the bond market, the illiquidity. And the biggest news of the day is that the Fed is now buying short-term muni bonds, which is a blessing because the municipalities are going to be challenged with a loss of tax revenues, sales tax revenues, for instance, and they're going to have to deal with this health crisis, and the funds are just not there. And so the Fed stepped in today and said that they would buy short-term munis as part of this liquidity injection, and that's a big deal, but it wasn't enough to stem the market's flow on the
That,
downside.
that's a great point. We've talked about the multinationals. We've even talked about small businesses. We haven't really talked about how screwed a lot of local governments are. Who we know they're not in the best capital position usually, in the best of times.
Well, New York
And this
City
is,
said they expect to lose $3.2 billion in sales tax revenues this
yeah,
quarter.
it's horrible.
And so you can imagine what smaller municipalities who have to deal with the health crisis are faced with. So it's good that the Fed is there, but I personally believe there's no E in PE right now. I didn't say that. Liz Ann Saunders said it about a week ago. She's on the television every week, but nobody knows what the earnings are going to be like. So how do you put a value on the S&P 500? That's my contention. So I have a number in mind. Well, let's hold it out for a couple of minutes that I think we're likely to go to like a magnet. But uh, Joel,
As
one
far as
thing,
earnings or as far as the market?
well, it's the same thing. You know, how do you put a PE on the S&P or a value on where the I've heard people say, for instance, well, the S&P is holding up pretty well. You know, I think 33% decline is discounted what's coming. Well, how do you know?
And that's the
Anybody?
scariest. That's the scariest part. Is even when looking at bear markets and other bear markets, we've never seen one like this before, where the unknowns are magnified, right? So even when compared to '08 and the bear market of the dot-com bust in the early '90s and the '70s and whatever, there's nothing to compare this to.
And I think that whoever said that this market will not find a bottom until there's some indication that there's either a vaccine or a treatment, and it's more likely to be a treatment, not a vaccine in the short run. probably summed it up pretty well. The unknowns are the reason I was bearish on March 5th. And the unknowns have only multiplied here because of the lack of equipment. I was just in a hospital for a walk-in surgical procedure yesterday. The nurses are afraid. They're coming into work, but they're afraid. And what they call PPE, the personal protection equipment, just doesn't exist. So the biggest problem that Italy's having now after that first wave of triage is that the doctors are getting sick. And if that happens in America, you just don't know what the consequences are. If we don't have the doctors and the equipment to treat people, and I don't want to sound like an
Yeah,
alarmist, but
it's
this is just the reality of where we are.
yeah. I mean, like you said, you were in the hospital yesterday, so you would know better than most, I think.
And someone
Um,
died in that hospital. He was a 92-year-old man who was undergoing heart treatment, but he died of coronavirus.
Yeah, it's so scary. So Mark, so like how would you approach things right now? We're all stuck at home. All we can do all day is look at our screens and look at our charts because we have nothing else to do, nowhere else to go. It's probably not healthy, but what would you do right now? How would you approach this market, either short term or long term?
Well, my advice back on March 5th and in our weekly market letters has been to sell down to the sleeping level. To me, that's a minimum of 20% in cash, or it was back then. I would not be putting that cash to work. There are a lot of people who are saying, it's time to put 15% of your cash to work. I just think that's a losing strategy. I think if we do get a sharp short covering rally, and they've happened in almost every bear market except for the ones that only last briefly, you look to sell on the rally and buy some puts. The best thing you can do for your portfolio is to have one put spread on or buy one put option, because then you're rooting the market down instead of looking to bottom fish. And I just don't think bottom fishing is going to work here.
So just sit on hands, right?
Well, sit on hands, wait for a rally, it'll come. If you're not at 20% in cash, then bite the bullet and sell into a hole. I never like to do that. But if you don't
Yeah.
have at least a 20% cash position, you're really not doing your family a favor.
So tell us about your shopping list, because we've talked about how having a shopping list. Now is the time to make your shopping list, even if you're not going to go to the store. Make your list so make your list so you have it. So when we do bounce back here, you can pounce. What is on your list for when we do eventually bounce back, whenever that day comes?
Well, I'll tell you what's not on my list. I'm not a big fan of defensive stocks. I was thinking of titling my market letter this Sunday, I'd rather be in cash than Campbell's soup. I just don't think defensive stocks are the place to be. If you feel that you need to be in defensive stocks, then I think you should be in cash. So if you're going to buy here, you're going to buy Amazon for two reasons. A, the obvious online shopping, but B, Zoom is under stress right now because of bandwidth constraints. So where are they going to go to get additional bandwidth? The
The
Amazon
cloud.
cloud.
The cloud. Yep.
So I think Amazon has got to be at the top of your shopping list, but I have to emphasize, I would only buy on big down days. Um, Amazon is just not cheap enough here at what, 1700. It's bouncing around so much.
1826.
1826. I mean, you want to buy back down to the December lows, so under 1400. You may not get a chance. Adobe is on my list. Adobe's business isn't going anywhere. It's only going to get bigger. Zoom is not on my list because it's selling at 55 times revenue, and I just think that's excessive. Um, I think Akamai is an interesting stock. They have a content delivery system. People sort of poo-pooed it as being a little bit out of date, but the stock recently made a new high. So that's another way to gauge what you want to own. Stocks that recently made new highs, except for those hockey stick type stocks like Shopify and Tesla. But I think Akamai is an interesting name. People are playing video games, the kids particularly. So you've got to look at things like Activision and I think it's called Take Two.
Yep,
Yep.
take two,
Yep.
And
TTWL.
yeah, I think some of the stocks that are overdone though are the pet meds companies like Chewy, and because they've that stock's up almost 80%. But I
Um,
think it's quality stocks: Microsoft, Amazon, Adobe, Akamai. but not Procter and Gamble, not Clorox. These are short-term plays on the fear factor. I don't believe in that.
We're getting another wave of selling here,
Yeah, I
folks.
was about to say that, Joel.
We are down here. We just hit 22.85, 22.75 was your low from yesterday. Your 2-day low comes in at 22.65.
Yep.
Limit
22.
down, I believe, is 22.31.50.
Yeah, so my number was actually the closing 2350 low in December of 2018. So the intraday stuff has been wild and volatile, but we had held that on a closing basis. So we're breaking your levels, Joel, and we're breaking my closing level. Here's where I think the market's going. It's going to 1700, which would be a 50% drop and also roughly a 50% retracement of the 666 low to the 33.95 high. So
Wow.
I think it's like a magnet here. I don't know when it's going to happen. I don't know if that's going to be the absolute bottom, but it makes sense to me that we're going to be down at least as much as we were in 1973-4 and 2008 and then again in 2000. So that would mean a minimum drop of 50% from the
You know
high.
what's crazy? You know what's crazy? Is 1700 sounds insane, but we're not that far away.
No. That's why I just can't get excited about putting cash to work, bottom fishing, looking for that rally. Traders who are got too much time on their hands are going to get singed fingers here. It's like staying in a Las Vegas casino for 12 hours instead of an hour and a half. The longer you stay in the casino, the longer you sit in front of your machine, the worse the results are going to be. So I hate to, be the bearer of bad news, but I don't see the good news yet.
Yeah, I mean, the only thing that, could turn around, as you said, as we've stated on our show several times, that, you get a cure or, vaccine takes longer to develop. I know several companies are doing it. We didn't, we haven't taken the necessary steps like China did to lock down. It sure looks like we're heading for that this weekend. And Mark, you said from some of your sources that that may occur this weekend. I mean, alarming number of increasing cases here. It's hard to differ with you, Mark. The markets. I mean, how long can they keep that? I mean, that New York is, being shut down. The trading desks are being shut. How is the market going to function next week? I know
Well,
we have electronic trading, but there's a lot of those institutions that need their resources at their work to trade.
Well, let's be clear. As you know, the New York is the only exchange that has people on it, and they don't really have a lot of people. Most of those bodies are for show on CNBC, but they will be trading electronically. ICE was a who owns the New York Stock Exchange was a pioneer in electronic trading. So it's sort of like NASDAQ, and that doesn't trouble me. But what does trouble me is the fact that liquidity in the bond market is unseen. And, we don't talk about it as much because we don't know as much about what's going on there. That is a people to people business, Joel. Although there's some electronic trading and fixed income, but that's an area where there are no bids. If the traders aren't on the desk, they're not going to bid for merchandise.
Mark, does it make you feel better at least that the authorities and central banks around the globe have indicated that they're willing to throw and spend whatever they have to spend to get us out, forgetting the biological aspects of this, but to get us out of the economic problem that is
Not
at stake
not
right now?
really.
No?
Not really. And I'll use the Danny Meyer interview on CNBC today about the restaurant business. Danny actually did it from Connecticut here, where he has a weekend house. There's 600,000 restaurants in America, approximately 12 million people in the restaurant business. They're out of work right now. Think about that unemployment roll. So
It's going to
I
be a
don't know.
record next week.
Yeah, I don't know what the stimulus. Sure, it's good that we're doing that, and it's more important that they're doing it in the bond market. $1,000 to someone who the average apartment in America, one bedroom apartment, $1,500 a month. Big cities, you know how expensive it is in Detroit, Chicago, Philadelphia, New York. So it's nice that they're doing it. but it's sort of like a Band-Aid on a gash out of a street fight. And uh, I think Joel nailed it that it's not going to be a vaccine. I don't think in the next 9 to 12 months. It
Treatment,
could be a
treatment.
treatment.
Yeah.
One thing that one of the sentiment services that I subscribed to keyed in on was that the market is unlikely to bottom out until the news stories about the coronavirus peak, and they haven't peaked yet. In 2008, when talk of depression dropped off by 20 to 30%, in 2000, when talks about the tech bubble bursting abated, and the news count is coming out of one of the big news agencies, and so far it's still spiking. So that's just sort of a sentiment way to measure how people are engaged in this fear um, that's gripped the country. But
Yeah.
if we do close down, Joel, could that be positive for the market if we do exercise the Stafford Act?
I don't know. I don't know. Now, I do remember vividly trading after 9/11, and that's the only reference I had. The markets were shut for a week. And when they resumed, we had a rally. I mean, every one of my day traders in my office, we were being patriotic. But I mean, we bought the open and there was a nice pop off the open, but I mean, quickly reversed into short positions. And
I'm talking about
yeah,
shutting down the country. I don't think they're going to
shut
shut
down the
down.
country. I mean,
I don't think they're going to shut down the markets. At least I
okay.
hope they don't.
Yeah, I don't know. I mean, shut down. I mean, we got to stop the spread of the virus, Mark, and
Yeah,
that's the way to
that's
do it.
that's it.
I mean, I don't know, where we're coming, what is going on in the administration. Fauci has to step up to the plate and tell the president to do it. He seems to listen to Fauci, and that's what needs to be done. And just at least, I mean, an alarming number of cases today. I just, like, let's stop the virus and then assess the damage. And then once we assess the damage, then we can move on from there. But I don't.
Joel, with 3 minutes left here, we are really, really falling heading into this close. The S&P 500 just breached 2,300. I mean, we are fall. I'll pull up the futures here. We are falling.
Yep, Spencer. We are.
Now,
We
some of that
quickly.
could be the quadruple witch, but
Exactly, exactly.
and traders don't want to be long, as you've said many times, going into the weekend, especially this weekend. So, we could bounce on Monday, and that's been the pattern in this decline. If you look, I think it's 14 days now of one day up, one day down. Maybe
Yeah,
it's
the only
10.
thing about that is that the news flow over the weekend. I mean, how many cases? How many? What could happen? I mean, if it abs and you know hopefully, the cases would be reduction or at least slowing down, then you're going to see one hell of a rally. But if the could do, cases continue to go up, then you could be in a rough situation on Monday.
Yeah,
Yeah.
someone said, and this is extreme, that there could be more deaths from economic distress, bankruptcies, personal bankruptcies than from the virus. I mean, people are going to get despondent, sitting in their houses with young kids, seeing their savings, go out the window to pay the rent. Um, I think one thing that could help, and Danny Meyer mentioned this, if utility companies and landlords started saying to restaurants, we'll give you an abatement period. So there are things that the private sector can do in addition to what the government does, whether anybody's willing to step up and do that. But I think if things like that started to happen, if people got a sense of hope, maybe we come out of it without a treatment. But I agree with you. Until the cases peak, this is going to be really tough to stop.
All
Who's
right.
buying? Who's going to buy?
People who are just dollar
Shh.
cost averaging automatically, I
People
think.
that are short.
And the people who are short
Right.
covering, that
Look
too.
at that.
Joel, I pulled up a chart of the SPY here. We are under a minute till the close, and we are just about at a new low of the move.
Yeah, 2281. That's our current low going into the final stanza here. I guess the only the only thing I can say at this point, we have not breached the low of the move at 2265. That was made on Wednesday. Thursday's overnight low was down at 22.75. Close for the session here. Stocks are now closed, so it is now the wild, wild west as the futures and the spiders and after hours traders take over. But that's about all we have for you today, huh, Spencer?
229.40 is the closing price on the SPY. 228.02 was the low of the move on SPY from Wednesday. So if we're going to call that the Bill Ackman low, it appears to have held for now. I want to thank our guest today, Marc Chaikin. Thanks to everyone who listened. You can catch the replay of this will be available on YouTube after we're done here. Everyone have a great weekend. Be safe.
Stay safe, guys.
Stay safe inside. I mean, I would say be safe out there, but we're not going out there. We're staying in here. So just be safe in wherever you are. Stay healthy, as Marc said, and we'll be back with you folks on Monday morning. Thanks a lot, Marc.
Thanks for the opportunity.